All right, so we're going to go ahead and get started. Welcome, everyone. I am so glad that you're here. Obviously, the topic of the day is going to be savvy Social Security planning for women. We know that Social Security is so important across the board for everybody, but the reality is for women, at least statistically, outlive men. So the decisions that are made around Social Security are very likely to impact you more. But really, for this presentation, whether you're married or single, you're divorced or widowed, there are certain strategies that you can use to give yourself more lifetime benefits over your lifetime. And that's really what we want to focus on today. My name is Eric Blake. Most likely, you're going to know me from our Simply Retirement newsletter, also the Simply Retirement podcast. Our focus as a financial planning practice is retirement planning, specifically retirement income planning for women over 55. That could be if you're single by choice, widowed or divorced, or even if you're married and you're just ready to take control of your financial future. That's really who we focus our work on. And we just want to be able to empower and educate women to live your retirement on your terms. And again, Social Security is such a big part of that. Primarily, the thing is to remember that this is going to be for educational and informational purposes only. If you've got specific questions, please talk to your financial advisor. If it's a tax related question, talk to your tax advisor. If you don't have a financial advisor, you don't have somebody that you can say, hey, can you tell me a little bit more about this? Please let me know. I'm always happy to answer questions as we wrap up our time together at the end of the presentation. But again, just want to make sure that everybody's on board with it, that this is for informational, educational purposes only, no advice. This is more just strategy, concepts to help you make a more educated decision about your own Social Security and your own retirement planning. So I always start off with this statistic, and it really speaks to what I just talked about, the fact that women outlive men statistically. And I think sometimes this surprises people, sometimes it doesn't. But the big headline is that women represent 56% of all Social Security beneficiaries age 62 and older, and about 66% of all beneficiaries age 85 and older. Again, speaks to the point that women outlive men. So when you make decisions about Social Security, when we're going to talk about survivor benefits, retirement benefits, spousal and ex-spousal benefits, it is important for women to be part of that conversation. And I would even make the argument, quite honestly, that women need to make the decision when it comes to Social Security, if we're talking about a couple. So this is a very important number to be aware of. So here are the realities, though. In general, we know that women have lower lifetime earnings on average. That means lower pensions, but also living longer than men. Women have made a lot of strides in the workforce, but there still is that pay gap. There was an article just a couple of years ago that basically said that the historic wage gap has been about 82 cents on the dollar. So women make about 82 cents on the dollar as compared to their male counterparts. Just a couple of years ago, the article came out and said that over the last 20 years, that number hasn't really changed. That percentage hasn't changed. Now, some of the younger age groups, it actually has improved. So there's progress being made. But for the most part, if you're joining me today and you're in that retirement income, that Social Security decision-making phase of your life, you probably still fall under that historic wage gap. So again, that typically means or often means lower retirement savings, again, lower pensions, lower Social Security benefits. Women tend to live longer. So these resources become that much more critical, and making the right decisions becomes that much more critical. So when we talk about that gender wage gap, just putting some numbers around this, basically that means that the full-time working woman will earn about less than their male counterpart over a 40-year working history. And that's according to a recent study by the National Women's Law Center. And translated another way, that means that a woman would need to work 50 years as compared to a man's 40 years just to break even. Now, of course, everybody's situation is different, but I just want to mention there's also a value of working a few more years. By not being in such a rush to retire, you may be able to, that may help you pay down some debt. That may mean you can add more to your retirement savings. And of course, that also may reduce the number of years that you need to draw from your retirement assets, your IRAs, your 401ks. And depending on your own history, that might actually give you more opportunity to actually raise your Social Security benefit. Okay, so now let's go and get into the subject that our presentation is about, and that is the value of Social Security and how you may be able to increase your lifetime benefits. So, the first thing we look at is Social Security is one of the very few income sources that you can't outlive. If you're worried about running out of personal assets in your older ages, you need not have to worry about that with Social Security. I know there's a lot of rumblings, a lot of talk right now about what's going on politically, but realistically, I don't have any belief that something's going to change with Social Security. So, from the standpoint of saying, okay, this is the only retirement income source that is guaranteed for life and increases every single year based on cost of living adjustments. Now, again, there's a lot of mixed feelings about some of that. It should be increasing more, that the cost it hasn't kept up with the cost of living. But the fact is, it at least does increase to some extent. So if we're looking at an example here, let's say your benefit starts out at about $2,000 a month. If you live 10 more years, that means you're going to receive nearly $300,000 in lifetime benefits. If you live 20 more years, you're going to receive nearly $600,000 in lifetime benefits. And then if we look at 30 years, you're going to receive nearly $1 million over your lifetime. And this is just assuming the traditional 2% cost of living adjustment. And actually, we know over the last handful of years that it's even been more than that. So again, just understanding the value that Social Security brings to the table when we're talking about a retirement income plan. Second thing again is that Social Security offers these annual inflation adjustments. So if your benefit starts out at $2,000 a month and your cost of living increase is 2%, that means your benefit itself, the monthly benefit, will go from $2,000 a month to $2,438 in that first 10 years. And then in 20 years, your benefit will be $2,972. And again, then in 30 years, your check will be $3,623. And that 30 years is not out of the question. You think about life expectancy, you think about the improvements in health and medical care. That 30-year retirement time frame is not unrealistic, especially if you retire maybe in your early 60s or even mid 60s. That's one of the things I talk about a lot is life expectancy when you get to your 60 changes. If the average life expectancy is, call it 78, and that's across the board, if you reach age 65, the increased life expectancy, if you're 65, that means there's a pretty good chance you are going to live to your mid 80s, reasonably good chance you may actually live into your 90s. So again, being aware of the impact that Social Security can have over that time frame is really important. Now, actually, there's no way of really knowing exactly what these future cost of living increases are going to be. But again, 2% is that traditional assumption. But even this year of 2025, it was 2.5. Last year it was 3.2. A few years ago, we had over 8%. Again, we've seen the inflation issue definitely peaking its head in the last few years. So again, inflation being a part of that cost of living adjustment with Social Security benefits as well. Now, because you might be entitled to more than one benefit, here are a few of the questions that you want to ask. First thing we look at is, do you qualify for benefits on your own record? So if you paid into Social Security for at least 10 years, then you qualify for your own retirement benefit. And those 10 years do not have to be consecutive. So if you're out of the workforce for a period of time, taking care of children, taking care of parents, as long as you have 10 years, then you qualify for a retirement benefit. Second question then is, are you currently married? And of course, has your husband started his Social Security benefit? Third thing is, has there been any prior marriages? If so, if you meet the requirements, you may actually qualify for benefits on a former husband's work record. So depending on your answers to those questions, again, you may be entitled to one or more of the following: your own retirement benefit, spousal benefits, divorced spouse benefits, or survivor benefits. And how you coordinate all these potential benefits is crucial in determining your overall Social Security income. So I just want to pause for a minute and let's talk about some of the important Social Security terms that get floated around there, but sometimes may not quite make sense as to what they actually mean. First one, which is really important, the concept of what is called full retirement age. And this is the age at which you may claim full, unreduced Social Security benefits. Now, a lot of people think of the age 62 when they think about Social Security, but that's the earliest you can take your own retirement benefit. But if you claim Social Security benefits at age 62, it is going to be permanently reduced. To get your full benefit, you must wait until your full retirement age to claim it. So if you're born somewhere between 1943 and 1954, your full retirement age is going to be 66. If you're born in 1960 or later, your full retirement age is going to be 67. And you can see based on the different years of birth, what your full retirement age would be. Now, here's another important concept we want to talk about, and that is your primary insurance amount. And we're not going to go into the actual formula to determine what that is, but basically your benefit is based on your work history. And the system uses your highest 35 years, a lot of how many years is your Social Security benefit based on your highest 35 years of earnings. And that's what's used to calculate your benefit. Now, of course, the higher those earnings are up to the annual Social Security maximum, the higher your benefit's going to be. And that's really, again, one of the reasons why we encouraged women to work longer if at all possible. Because if you've taken time out of the workforce to raise children or you go back to school, there may be some zeros in your earnings history. And if you keep working, you may be able to replace some of those zeros with higher earnings numbers, which is, again, going to raise your benefit. And that's something really important to be aware of is if you've got zeros in those 35 years, that's where, again, that decision to decide to work longer really becomes, it should really be part of the equation in looking at your actual retirement goals. Now, one of the things you want to do is if you want to find out what your primary insurance amount is, you just need to go to look at your Social Security statement. And it's your benefit amount at your full retirement age. So in the example that you have on your screen here, if you look at what the full retirement age benefit is at 67, that's the full retirement age benefit. That in this example, that's $2,119 per month. So this is, again, the PIA. You may see it referenced as that, PIA, primary insurance amount. So let's talk about retirement benefits. As I said before, if you've worked at least 10 years in a job that paid into Social Security, you're going to be entitled to a retirement benefit. I am going to touch on if anybody that's joining us has been subject to WEP, that windfall elimination provision, and a GPO, government pension offset, all this related to the Social Security Fairness Act. I'm going to hit on that before we get to the end of our presentation tonight. But again, that's where that 10 years really becomes critical in understanding that if you've had 10 years of earnings history, you are going to be eligible for a retirement benefit. So to get your benefit estimate, you'll need to open an account, socialsecurity.gov/my account. There's been a lot of this in the news recently about making sure that you can prove your identity. It's either the login.gov or it's the ID.me now that is required. If you happen to have a login that you set up prior to 2021, you're probably going to need to reestablish your login information through one of those, either the ID.me or the login.gov, in order to be able to verify your identity and be able to access your Social Security information, especially if you're needing to go through the process of actually applying for benefits. The Social Security Administration, they stopped generating those paper statements for people who also, if you're already receiving benefits, then you don't get any of those statements either. So again, you want to be able to access your information online. Now, you also can, by going to the Social Security website, this is where you can also find some of these retirement estimators. And these are where you can, again, play around with some of the numbers. Depending on your work history, you can get an estimate of what your potential benefit could be. And more importantly, maybe you have only 30 years of history, plug in some numbers in those last 5 years. If you do continue to work, how much more benefit could you receive if you fill those 5 years of zeros with positive earnings? So that's where you can look at a lot of these and do a lot of that planning. And if you go to the website, there's going to be some of these that are where you can actually utilize your work history. Some are just kind of basic calculators. So really, depending on what you're looking for, what kind of information you're looking for, you should be able to find what you need. But I would also say that if you've got questions about survivor benefits versus my own benefit and things like that, that's really where a financial advisor can be valuable. All right, so let's talk about when to apply. Actually, that's a big question. It can be complex, and I think it really needs a customized analysis in many cases. But I want to talk about some of the key points to make you aware of. If you apply early, that means your benefits are going to start lower and they're going to stay lower for the rest of your life. You just got to be aware of that. Sometimes the circumstances may dictate that, hey, I don't have any income. I lost my job, whatever the case might be. So you may be left with no choice, but that is something to be aware of. It is going to be reduced. Then you have the cost of living. This is going to magnify the impact of these early decisions. The longer you live, the more beneficial it is to delay benefits. The answer to those questions is always based on longevity. How long are you going to live? Usually anywhere between 78 to 82 is where that break even point is. Then we think about survivor benefits and the decision around that. If you're married, you want to talk about which of you is the higher earner. And if at all possible, especially if it's the husband, if the husband is the higher earner, again, if women outlive men, you would like to try to delay the higher earning spouse's benefit as long as reasonably possible, because that does become the survivor benefit. Unfortunately, if a spouse passes, one of those benefits is going away. You get to keep the larger of the two. So for planning, again, it's really critical to take that into consideration. So let's talk about spousal benefits. So when Social Security first was instituted in 1935, if you think about it, most women didn't actually work at that point. So the system allows for spousal benefits to be paid where a woman can draw Social Security off her husband's work record. Now, of course, most women now, they qualify for their own retirement benefit. They do have that work history, but there may be circumstances where you still may be able to actually take advantage of the spousal benefits. And because Social Security is gender neutral, men can also sometimes take advantage of spousal benefits as well. So here's an example we can walk through. We've got Jack and Jill. They're married. Jack's PIA, his primary insurance amount is $2,400. Let's say in this case, Jill never worked, so she doesn't qualify for Social Security on her own record. After Jack files for his benefit, and that is a key point, the higher earning spouse must have filed for their own benefit. At that point, Jill can file for her spousal benefit, and the amount's going to be 50% of his PIA if she files for it at her full retirement age. For spousal benefits, you have the choice. You can apply as early as 62, but that's where that reduction really becomes important. So what would be 50% as a maximum benefit at your full retirement age could get reduced to as little as about 35% if you started at age 62. So that's a pretty significant decrease. Now we get to what our divorce spouse benefits. So if you are married for over 10 years to the same husband and you're currently unmarried, this is what you want to pay attention to. So here are the rules. If your marriage lasted at least 10 years, and if you are currently unmarried, that is key. If your ex-husband is at least 62, you may be entitled to divorced spouse benefits. If the divorce occurred more than 2 years ago, he does not need to have filed for his own benefit. He only needs to be 62. Again, that's a key differentiator between spousal benefits and ex-spousal benefits. He does not have to have filed in order for you to file for ex-spouse benefits. All right, now let's get to survivor benefits. You probably can't even imagine this now, but if you're married or even if you're divorced, your husband or your ex-husband might very likely go before you do. And odds are that he will. Since women on average live longer than men, so you might have some point in your life where you may be eligible for survivor benefits. And if that survivor benefit is higher than the benefit you're receiving at the time of your husband or ex-husband's death, you can switch to the higher benefit. Even though it may be a way off, maybe a long time from now, you need to understand how survivor benefits work, because certain decisions that are made today can affect what that benefit is going to be in the future. So survivor benefits can actually be claimed as early as age 60 or 50 if you happen to be disabled. But again, remember that if you claim at 60, the amount will be reduced. So in many cases, young widows shouldn't automatically just file for their survivor benefits as soon as they turn 60. You need to analyze all of your Social Security claiming options before deciding when to file. So to qualify for a survivor benefit, you must have been married to the person who passed away, of course. Living together does not count. You only need to have been married for 9 months. Now, if you died after you divorced, that marriage, again, must have lasted at least 10 years. Now, by the way, one of the things to be aware of is that same-sex couples can now also file and get Social Security benefits if they are or were legally married. So if your ex-husband dies, and if you're either unmarried or you're married and the marriage took place after age 60, that is a key point. If that's the case, you may qualify for a divorced spouse survivor benefit. A lot of women don't even think about this, especially if that marriage was a long time ago. Just as an example here, let's say we got Sam and Sue. They were married in 1970 and they stayed married until 1985. Sam passed away in 1995. Sue has not remarried. As soon as she turns 60, she will become eligible for a divorced spouse survivor benefit. Again, remember though, if you start at age 60, it is going to be reduced. So in this particular example, she might be better off waiting until she turns 66. But there are, again, one of the things that if the marriage ended many years ago, but if it lasted 10 years, you want to make sure that you're aware of what your potential benefit options would be. So if you think you might outlive your spouse or your ex-spouse, and again, odds are that you will, you ideally would like to encourage your spouse to wait until age 70 to start his Social Security benefits. Then you would want to claim your survivor benefit at your full retirement age or later. Now, hopefully you'll be well over full retirement age when your spouse passes away, but you just want to keep this bit of information in mind. And then you want to coordinate your survivor benefit with your own retirement benefit. Again, knowing that you have the capability to potentially switch really becomes critical. So let's talk a little bit about remarriage. So if you're divorced or widowed and you are thinking about remarrying, you want to keep these rules in mind. If you remarry at any age, you can't receive divorced spouse benefits. So if you're already receiving divorced spouse benefits and you're thinking about remarrying, you just got to understand that your divorced spouse benefits will stop. However, of course, you may be able to get spousal benefits based on your new husband's work record. If you remarry before age 60, you can't get survivor benefits or divorced spouse survivor benefits. If you remarry after age 60, you can still get survivor benefits or divorced spouse survivor benefits. Again, that's age 60 is a critical age. And I know these rules can seem hard to keep straight, but if you have questions, you can always reach out to us. Again, I'm always happy to answer questions, or of course, call the Social Security Administration. So those are some of the key issues around Social Security with marriage and your eligibility based on current marriages, previous marriages. Now, I touched on this just a bit ago. For those that may be subject to the windfall elimination provision and GPO, I just want to take a few minutes to walk through this because it won't apply to everybody that's paying attention or that's listening to our webinar, but for a few people it might. So it's important. So WEP stands for Windfall Elimination Provision. GPO stands for Government Pension Offset. And these two provisions apply to people who worked in non-Social Security covered positions. In other words, they did not pay into Social Security while they were working. So for example, in many schools, teachers, especially the K through 12, don't contribute to Social Security for the most part if you're in the public school system. A lot of other jobs, police officers in many cases, firefighters, government jobs. There's a lot of different jobs that don't pay into Social Security, which means they may be eligible for a pension under that non-Social Security covered work. Up until recently, with the Social Security Fairness Act, that meant that your benefits either, number one, could get reduced or even completely eliminated. So GPO, if you had a high enough pension, it might completely eliminate any spousal, ex-spousal, or even survivor benefits that you may have been eligible for. So that has been repealed. Social Security Fairness Act was passed by Congress in December 2024, signed into law by President Biden at the time, January 5th, 2000. This new law, the Social Security Fairness Act, eliminates Social Security benefit reductions for certain government workers and others who receive pensions from non-Social Security covered jobs. And that's effective January 2024. A lot of the benefits are retroactive to January 2024 as well. A lot of these benefits are just now getting paid out. So they started paying the lump sum benefits back to January 2024, started getting paid in February, March. The increased monthly benefit for many people has just started. So in the month of April, that's where these first increased monthly amounts are getting paid out. One of the things I want to point out, if you worked in a job that did not pay into Social Security and you expect to receive a pension from that job, then again, that's where WEP, the windfall elimination provision, may apply to you. Or again, being waived, now you'll be able to get those benefits. Or if you qualify for spousal or survivor benefits based on a spouse's record, that's the government pension offset piece. 83% of those impacted by GPO were women. And again, as you can see, that's the portion of the law that impacted spousal and survivor benefits. So I know here in Texas, a lot of teachers, they were not going to receive any survivor benefits of any kind because they had a pension that basically wiped it out. So if that applies to you, again, this is where you want to look at what you might be eligible for. If you never applied, you said, hey, I'm not going to get anything, so I'm just not going to apply. I encourage you to apply as soon as possible because that's the only way you're going to get that benefit started. If you are, I'll call it fortunate enough, that's probably a bad way to phrase it, but if you were fortunate enough to have applied in the past but got denied, you're still in the system and you should be getting those updated benefit amounts. But if you never applied, whether it's because it was your decision or even unfortunately, many were actually told by the Social Security Administration not to apply, you're not in the system. You're not going to get those benefits unless you get an application submitted. So you want to do that as soon as possible. Again, here's a recap of what I just went over. You want to make sure that if you're subject to either of those, the WEP or the GPO, that you're able to get your application in. You want to reach out to Social Security Administration. If you think you're eligible, you should have already received benefits. From what I read most recently, they're doing it somewhat on a geographic basis. So if you have not received your benefits, definitely reach out to the Social Security Administration to see if you can find out what the status is. When we close out, you're going to be taken to our website. You're going to see our Simply Retirement Roadmap process. This is our free process to help you evaluate our services, make an informed decision about working together. What we're going to do is be able to evaluate your Social Security strategies, look at what the optimal Social Security strategy might be for you. Along with that, be able to look at your tax strategies. How do we reduce your lifetime tax liability throughout your retirement years? We're going to look at your investments, your asset allocation analysis. Are your retirement accounts or your investment accounts structured in the best way to generate the income that you need? And then we're going to provide retirement recommendations to make sure that you're doing everything you can to live the best life you can in your retirement years, to travel along that retirement journey, do the things that you want to do. Talked about this earlier, but if you are interested in getting more education specifically for women, please check out our Simply Retirement podcast. One of those is if I started benefits at 62 because I lost my job and all of a sudden I got a new job, I might want to actually withdraw my application because I've got enough income. I can withdraw my application and kind of start from scratch, let those benefits continue to grow because again, now I have a source of income. So there's a number of different strategies that you might want to be aware of. Also, the most recent episode that I did, which came out yesterday, in fact, was how you pay taxes in retirement. So can I have taxes withheld from my Social Security benefit? Do I even want to have taxes withheld from my Social Security benefit? If I don't, how am I going to pay my taxes? I don't have a paycheck anymore. How do you actually pay taxes when you're in your retirement years? Last thing before we get to the questions. So this is just the second of our Women in Retirement Success webinar series. The next one is going to be May 16th. That's going to be how taxes change through 4 stages of retirement. That's where we're going to dive really deep into tax planning as you transition through those pre-retirement years into those early retirement years, the later retirement years, and then the kind of end of stage, end of life. How do taxes play into all those 4 stages of retirement so that you can have an appropriate tax plan? Again, with tax planning in retirement, it's about we're okay paying our fair share. We really don't want to leave Uncle Sam a tip, though. And then the 4th one, which will be in June, is more focused on healthcare expenses, managing healthcare expenses in retirement. So again, I want to try to get through this in a reasonably quick amount of time. If you've got questions, feel free to go ahead and drop those into the Q&A. If there are questions, please go ahead and drop those in the Q&A. If not, we can wrap up a little bit early, but let's see if we get any questions. While we're waiting for questions, so I just do a kind of a quick recap of this is episode 47 that I did for the podcast, where I talked about these 3 little known Social Security strategies. One is I just touched on a little bit ago. What that's just basically just withdrawing your application. If you file at 62, for example, and this can happen at any time, but if you file for Social Security benefits within 12 months, if for whatever reason you just say, hey, that wasn't the right decision, I changed my mind, maybe you get an inheritance, maybe you sell an asset of some kind, and now all of a sudden you've got enough income and you don't need the Social Security benefits, but now you've started them and they're getting reduced. You can say, I'm just going to withdraw my application altogether. Now, the key, you can do that within the 12 months from the application date. But a big key is you got to repay those benefits. So you got to have the resources in order to do that. That can be a very valuable strategy if you want to have your benefits continue to increase over time. The second one was if you're over full retirement age, you could actually suspend benefits. Let's say maybe I'm married and I started benefits early. I get to full retirement age. I can say, hey, I actually would like to stop my benefits so that I can continue getting those delayed credits. Or maybe my objective is actually to increase my survivor benefit for my wife, or for my spouse. So that's a situation where you can actually suspend benefits. They'll start growing again. They'll start increasing again. And then let's say at age 70, I can restart those at a higher amount. And again, also a higher potential survivor benefit for my spouse. Third one was you can actually get 6-month retroactive benefits. So I went through an example on the podcast where let's say you want to start Social Security at full retirement age, and that's 67, or maybe you've delayed until 70, but your birthday is early in the second half of the year. Let's say it's in July, but you don't really want to retire until the end of the year. One of the things you can do is say, I'm not going to apply at 67. Say I turn 67 in July. I don't necessarily want to apply because I've got a full year of salary. It might not be very tax efficient. It might actually put you in a higher tax bracket. I can say, okay, my birthday's in July, but I'm actually not going to file until January. But when I file, I'm going to request 6 months of retroactive benefits. I'm going to get a lump sum in January for that last 6 months worth of benefits. But it's all then in my scenario, it's going to get taxed in the following tax year versus the year in which you had a full year of salary. So that's another example of a strategy that can be utilized where, again, it really takes some planning and it takes actually, number one, being aware that it is a strategy that's available. But those types of things that we like to share education on just to help women make improved decisions to actually for life expectancy purposes, for retirement income, just to make sure you've got the right plan in place. All right. So do add a question. So do you think spousal benefits will be eliminated in the future? The time period when a couple apparently could draw at 150% of one person's input. It doesn't seem prudent to pay benefits to someone who hasn't paid into the fund. I don't think they're going to be eliminated. Actually, the reality is that there's more dual income families now, but there may be circumstances, and unfortunately, it often is the wife, is the woman who has to take time out of the workforce because they are typically the caregiver. When somebody in the family, a child, a parent needs care, that's typically when spousal benefits might come into play. So I don't think it's going to get eliminated anytime soon. Again, I'm sure people can make arguments for why it should, but when you think about the origination of Social Security at a time when many women didn't work, less frequent now that's the case, any work history, but you may have had a reduced work history. So again, if we talk about that 35 years of earnings going into your calculation for your own benefit, you need 10 to qualify for retirement benefit. But if you only have 10 years and you've got 25 years of zeros, your benefit is going to be minimal. And we never know why somebody might not have those extra 25 years of work history. But in many cases, it could be a health related issue. It could be a caregiving related issue where you're providing care for family members, for older adults. So again, I can definitely see where the argument can be made, but I just don't think that's going to be the case, that the spousal options are going to get eliminated. While we're waiting for any other questions, I will say what I talked about, that the Social Security Fairness Act, and obviously the GPO portion of that does impact spousal and survivor benefits. I will say that I would expect that some version of GPO is probably going to come into play again at some point in the next few years. one of the things that actually there can be an argument to say if the spouse that was a teacher for 25 years has a pension and they don't lose that pension, that's the thing with Social Security. If you've got two high earning spouses and one passes away, now you've only got one Social Security benefit. One of those goes away. If one of the spouses was the teacher and one spouse wasn't, one of those spouses passes away, there's a pretty good chance that not only did they keep the pension, but they also now get under the Social Security Fairness Act, now they also get these survivor benefits. So I can see where that may be something that changes. My argument against that is that, especially here, again, I use Texas as an example. Texas teachers, the increase they got, the cost of living increase they got in 2023 was the first increase they got in 10 years. And the maximum increase was 6%. Inflation in 2021 alone was over 8%. So that's where I can definitely turn that argument around and say, if I'm not getting an increase in my own pension and over, so let's say like 20 years, if I'm still living on the same amount, I've lost all that purchasing power. That's a pretty good argument as to why that person might need survivor benefits as well. But I can definitely see that changing in the next few years where they kind of revamp that government pension offset provision and something new will be implemented in its place. I don't see the windfall elimination provision. I don't see that's going to get reinstated because again, if you worked enough years to get Social Security, why shouldn't you receive the benefit that you earn? So that one I don't see any changes to, but I definitely see that GPO related to your question about spousal benefits or survivor benefits, seeing that you revamped into some newer version where there's some aspect of reduced spousal or reduced survivor benefits in those cases. Any other questions? Anything else I can help with on the Social Security side of things? I know and I haven't gotten the question tonight, but it's always something that pops up. I actually had a client ask us today about this, about kind of what my thoughts are about the future of Social Security. Number one, obviously, there's a lot of stuff going on right now politically that, hey, is Social Security going to come to an end? Is somebody going to try to stop it? It's not going anywhere. But what I will say is that we know that at some point, something's going to have to be done. So if you're thinking about the future liquidity of Social Security, well, depending on what you're looking at 2033, 2034, 2035, that's the predicted period where Social Security runs dry. Reality, that's the point where there's more going out than is coming in. So they are going to have to do something. If you're really worried about what's going to happen, your worst case scenario, or your kind of plan, we would call it is, hey, if they reduce everybody's benefit by about 25%, that solves the problem. So if you really want to plan for worst case, take your estimated benefit, reduce it by 25%, and then build your retirement income plan around that. Not something that people like. Nobody wants to see benefits reduced, but that would be your worst case scenario type strategy. The reality is what's going to happen is Congress at the final hour is going to implement something. Are they going to extend the retirement age again from, let's call it 67, where it is now if you're born in 1960 or later, to age 70? When I tell people, you're most likely not going to get impacted by something like that. The people that are going to get impacted by that are going to be those that are in their 20s and 30s right now. Same thing that happened in 1983. That's when the last significant change was made, where they extended the retirement age from 65 to 67, but it happened over 40 years, basically. So that's where I would tell you that if you're watching this, you're most likely in that decision-making phase. You're in your probably later 50s, early 60s, that kind of thing. You're most likely not going to get impacted by it. But again, there's a lot of things they could do. They could there's currently an income limit on Social Security taxes. For Medicare, there's no limit. So however much money you make, you pay Medicare taxes on every dollar. Could they potentially do the same thing with Social Security? And right now it's around 170,000. If you make more than that, you don't pay Social Security tax on that income. They could change that, maybe raise it to a higher level. They could change the cost of living formulas. Maybe it's for higher earners, maybe you don't get a cost of living adjustment where you get a reduced cost of living adjustment, whereas lower earners get the full cost of living adjustment. So there's many things they could do, but unfortunately, my guess is they're not going to do it until the very end of the time that they're working with. Thank you so much for joining. If you do have any questions, I'll shoot out a follow-up email just so you've got my contact information. Most likely you're already on our email list. That's probably how you found out about this. So feel free to reach back out to me if you do have other questions. Would love to have the chance to talk to you about your specific retirement goals and if it's something that we can help you with. When you wrap up, that's where you're going to be taken is to our Simply Retirement Roadmap process. If I could do anything to help, please let me know. Have a great night.